John, it is really good to see you. Today, we are talking through 3 strategies to minimize your Social Security taxes. Many retirees are surprised to learn that above a certain income, Social Security is taxed. In retirement, it's important to know how all your income streams will be taxed and how to mitigate those taxes. So let's just start at the top. How are those Social Security taxes calculated?
Yeah, so Social Security income taxes, really, you got to remember, you have to go back to the roots, is that was really in mind for maybe the poor individuals or somebody that gives them something to live on.
Hmm.
But ultimately, what that created was an income threshold, and it actually is a different income threshold than some of the other items that you would see on your taxes. And what they call it is the provisional income.
I'm glad you brought up provisional income because that is what everything's based off of. So, what makes up your provisional income?
Your provisional income actually includes quite a few items. There's only a few that they would exclude. And so, looking on this, you'll see that any kind of income you have come from working, or maybe you took a distribution from your IRA account, pensions, um, part of your Social Security actually gets included in that provisional income. So there's a number of items that get added in to the equation, and it's important to know which ones so you can maybe help control some of that.
Okay, so I want to talk through those 3 strategies then to reduce your taxable income. And what's most important is that we kind of get rid of those biggest liabilities, which are those tax deferred accounts. And that's why your first strategy is to consider converting those accounts to Roth accounts.
Correct. And I think most people who have paid attention to what we've talked about over time know that although I believe the Roth is a good option for a lot of people, um, I think it's important to look at all the facts and why are you converting to the Roth. And this is
Right.
one of those reasons you would. If you have somebody who's very budget conscious and can live on a certain amount of income and do so in a way that fits their lifestyle, converting to a Roth IRA may create the opportunity to take advantage of having your Social Security income not be taxed in the future.
hmm And then the second strategy you recommend is consider shifting income investments. Some investments generate taxable income, others are non taxable.
Correct. And this is really a tough one to do for the average person. I would say the what you have to look at here a lot of times, and the one that really surprised me even when I read through it initially, how they include municipal bond interest.
Right.
And you hear and say, oh, I'm going to go get my tax-free municipal bonds, which again are a great asset for a lot of people, but they do affect the taxation on your Social Security income. And so it's just important to understand that. And, if you're willing to accept that and are willing to do that, that's fine. I have some people who are willing to pay as little as possible to the government as possible, and they will do everything they can to avoid that.
Yeah, that makes sense to me. And then the third strategy, you say you could delay claiming your Social Security benefits.
You can, and this is a little bit like threading a needle trying to
Hmm.
avoid some taxation on Social Security. And so a lot of times you're really sandwiched between when do you want to retire, then also when do you have to start drawing your retirement accounts with your required minimum distributions. And so
Hmm.
that is the window. And then stuck in the middle there is age 65 when most people can start collecting their Medicare, which is also another important factor in the equation. And
Hmm.
so looking at this from multiple views and understanding what the pros and cons of trying to avoid that taxation on Social Security entails, you kind of just go from there. But yeah, it's one of those deals where you really have to go slow and look and see what is best for your circumstance. And that's really what we really look at.
Right. And like you said, there are a few surprises, I think, for most people, which is why working with a professional can be very helpful in regards to some of these strategies. So, John, if somebody has questions about anything that we've covered today, what's the best way to reach you?
Yeah, definitely our phone number. It's 440-471-4300. Yeah, this is really a hot topic for a lot of people. And I've been around long enough, 20 years now, where I actually was there when interest rates were high in the past. And this has
Hmm.
kind of been a forgotten topic in a lot of ways for a lot of people. This was really the main topic over that when I first got into this business in the 2000s,
Hmm.
where interest rates were high and people were having a lot of interest coming in. And they're looking for ways to have their Social Security not get taxed. So
Yeah, it's a big deal. Yeah,
it
this
is.
was very helpful. Yeah. John, thank you so much for your time today. I appreciate it.
Sounds good. You take care. Thank you.